Daily candle. Let's have a look at the daily candle. Oh god, I don't like those candles, huh? Just slightly closes above previous day high. I hate those. They look so bullish, but and for all intents purposes it is bullish because it was a higher close, but you close lower now, it's not going to look bullish anymore. You close lower than there, it's going to look like it's kind of reversal. Yeah, the push up was with decreasing volume. See that? Let me have a look on Bybit. Yeah, decreasing volume. I'm not a fan, huh? I'm not a fan of these candles, to be honest with you. No, I don't know. It still keeps on going up. That's the problem. So I think this idea I have of previous high holding as SR flip is correct, but it's not correct because we just keep on making higher highs now and it's not really pushing up. There's no real squeeze right now. I can't really see a squeeze. So it might push up and do exactly the same thing, but we're not going to get that impulse, I don't think, unless we get an injection of volume. We are above this line. We're above these two lines. So, you know, I don't really like it. So I'm going to get rid of it. Have a look again. Get rid of these SPs. So yesterday the price came back in to the single prints, bounced. So that short was correct actually. And so was that long, although the invalidation was difficult. It's not easy right now. So let's just have a look. Have a look. Get rid of these lines. Get rid of all of this. What is all that? Just get rid of all of it, really. Just get rid of everything. I'll keep that. I'll keep those. Otherwise, we'll just get rid of everything. All right, let's just do a volume range. I'll do a couple of things now. I'm going to do a volume range in this upper range. Okay. I'm going to do a few volume range pulls just to try and see something. Actually, let me just get rid of those lines too, so it's clear. And actually, let me just hide this. Let me just identify the ranges for a bit. Okay, yeah, so there's a range probably here. That's the dividing line. And then you have another range down here, probably there. Then you have another one here, but there's a gap. So it's kind of there. Yeah, like these are the ranges. You have this kind of expansion, which is more gappy. And you have another range down here. Potentially. It's just a gap. Right. Right, let me do the volume pulls on these now. Okay. So that's that range. Let me combine them now. Mm-hmm. Maybe just ignore that. Okay. Let's get the previous all-time high back in there as well. I think the previous all-time high needs to hold as a support level. I think that's going to be really important. I don't think any of these all-time highs matter, all these local ones, to be honest with you. I think the previous bull market high, all-time high is important. And you can see that it's important because as we lost it here, it back tested, and as we reclaimed it, just with one candle, the price exploded. So that line was very key. And then here you see that back into the all-time high, and it held as a support level. So the previous all-time high is our line in the sand. You can clearly see how important it is. You see that? Very important line now we have. I think that's the most important line actually, as far as I'm concerned. If we lose that line as a support level, then technically that's a failed auction of these highs. Okay, I think everything else is just kind of mishmash. It's like arbitrary kind of, it's like, right now of this overall range from where we broke out here, we have a few kind of volume levels and none of them are really corresponding. Maybe the strongest one is here. See here, you have like a little bit of strength here in this little zone here. So I'm just thinking maybe we long there. Maybe that's the next nice long there on the swing failure. Not really. Yeah, maybe from this pivot to this pivot, from this pivot to this pivot, you've got a little bit of a golden pocket. From those two pivots, from here to here, the good thing about that level there is it's a swing failure. It's easy to see. It'll be get people bearish and then go up again. Okay, go back up. Is that a market structure change? Potentially. If it goes down to there and it goes back up, there's potentially a local market structure change because you have higher high, higher low, higher high. That would be a lower low. So it may not happen, but it'd be a nice place long. And then if you do go down there, obviously you take profit, but maybe it goes up. Maybe you change market structure and you just get short centering for a lower high, then you squeeze them up. That's how you get up. I'm just trying to see how we get up, that's all. You kind of have to get really bearish to go up, and I think changing market structure is the way to get people bearish. So on the local time frame, that's how you change it. You just take out this pivot here. All right, it's just an idea. So effectively, you lose this, you kind of go down. Don't know how low it will go though, that's the thing. Looking bearish, but then you do this. Right. I don't know if this is going to happen, but it would be a good way to squeeze shorts. Just add that in. Long trade. That's my long trade in the highs. I don't really have another one. I wouldn't long the highs anymore, even though it's going up. What you can clearly see is that we're losing a little bit of steam. We're kind of losing the steam, and we're not really, like, look how poor that swing failure was. It's really poor. There isn't much trapped liquidity now, and there aren't, if there are shorts, that's not where their stops are. So they must have really wide stops now, big shorts, and they're just shorting and just slowly allowing the price to fade. So there is a wedge in play. It's more of a kind of rounding wedge. It's like that. It's looking very wedgy. Doesn't mean that the price can't go up one last time and liquidate anyone who's got tight stops. On the local level, you have a little bit of a tighter wedge forming here. See that? Let's be a bit tighter. So maybe we break this local wedge and do what I kind of imagined. Yeah. If that doesn't swing failure, if that fails, you've got this trend line on this value area high of the whole range. No, don't like it. Let's try it to this pivot. Yeah, it's a bit better. It's on the golden pocket there. Got the value area high. Maybe it'll find support on this trend line. I just don't think I don't think it's a good idea to lose this previous bull market all-time high. So whatever happens, this is terrible. It would be terrible if this doesn't work and we just continue going down. Then actually you just want to get back in for a long, and so it'll be easy to see, and at least you'll be lower down. And so probably then you're looking at No, just back up to the current all-time high then, and then you're basically, what you're looking to do is range this whole top part becomes a big range potentially. Maybe this one we can take it back there then. Then we just have to redo the volume pool if we have a wider range. Okay. And then short, well, you can just short now. I think it's very, oh, it's come down a bit. I'm already in a short. I think, David, you're already in a short. We're all in shorts. Why are we in shorts? Well, we had a swing failure. It's a very poor swing failure, but that was your swing failure. That was your signal to short. It doesn't mean you're going to get, you're shorting into support effectively. But the reason why you short is because you have such an easy invalidation, and it's so small as well. It's such a small invalidation. Eventually one of these highs is going to be the high, eventually. So we kind of, we've pushed past the highs so many times now. Eventually you're going to get a lower high. Yeah, eventually you're going to get a lower high, and then the price is going to go down. So I don't know if this is the one. This is pretty weak candle formation here. You see how this goes up, and then you go kind of form structure, and then you kind of take the liquidity and you come back down. It's pretty bearish on the 30-minute time frame. It's pretty bearish candle formations here, so it's quite an easy short, to be honest with you. But who knows? Look how the highs keep on getting taken. So it's also a risky short. All of these shorts are risky. I said from the beginning that shorting in price discovery is quite risky. You've got this 4-hour doji, which takes the liquidity from the high. That's quite a nice topping candle. Take the liquidity from the high. A red bearish candle, close back into this value area. It's pretty bearish. So potentially I'm seeing some bearish signals now. Now, doesn't mean that we're going to zero. It just means that maybe we break this kind of tightening wedge and we just form something wider. Maybe this is going to happen. Maybe something else is going to happen. We just have to wait for the reaction. The reason why I like this trade is because it's a swing failure. And they're easy to take. They're easy to take, yeah? Otherwise, you lose this wider wedge and you just go down for the previous bull market all-time high. It doesn't have to go underneath it like I've drawn. You might get a lot of... you might get a higher low on this pivot here. And it might just, if we do break down somehow, it might just, you know, it might just bounce and just form a higher low here, because there might be a lot of liquidity just at that level, because it's an easy entry for most people, the previous bull market all time. The reason why it's an easy entry is because if for some reason you lose it, there's a very high probability, like very high probability, that will go back up, and anyone who's entered can just exit at break even if that trade didn't work for them. So it's a very easy entry, because it means that if you're wrong, you can easily correct your mistake if you're just doing spot trades, not leverage obviously, but spot trades. It's a very easy trade to correct if you're wrong, because you would expect it, if it went through, you'd expect it to come back for a back test, yeah, and maybe you don't get that breakthrough. You'll just get a little bounce straight off it, make a higher low of these lows and continue going up. So probably that will be my next area of interest for a long, and I'm in a short right now. Let's see what happens. That's basically it. The short that I'm in right now is more of a cover, and just to cover my spot, willing to risk a small percentage. If the price comes down to here, I'll probably, yeah, I'll take profit. Why wouldn't I? Right here, down here where I'm looking to long, I will take profit on my short, and I'll probably look to take a long. If I could, we could swing failure this pivot here, I will definitely take a long and see what happens. All right, that's kind of how I'm seeing the charts. Good morning, Sebastian. Good morning, David. If it pumps up and holds above the current high, would you enter? Nah, I don't think so. I think if I nah, I don't know, David. I wouldn't, I don't know. Yeah, you have that trend line as well from lower down, see? So I think this would be quite... There's some things that can happen here, yeah? You actually, look, you actually have... This might not happen because, look, you've got this trend line here, these two pivots, and you see how it's bounced off it, it's held a support. It might just continue, come and bounce here and go back up, yeah? This might just do that. And not make a lower low here, which is what I would take as a trade. It might just do that and go up like that and continue doing that. So possibly that will be your take profit, slightly higher. Yeah. I think the thing is that it's kind of looking bearish to me. I don't know. It's looking like a ghost, but on the price chart, see, a little bit of a ghost. A little ghosty. It's like a head and shoulders, but with a small head and two big arms. It's a ghost. Actually, talking about ghosts, let me have a look at the CCI. See if we see any hints here. So you've got bearish divergences on the MACD. You see how the price goes up and the MACD is lower. It's not hidden bearish divergences. It just shows that there isn't really much buying at market. It looks a little bit like exhaustion, actually. It's not the strong divergence. The strong divergence would be if the MACD was going up and the price was going lower. Here, look, this is the strong divergence here. Let me clear this and I'll show you. You see how the price goes up, high, lower, high on the MACD. And see what happens? Bzz, crash. And that's the strong divergence, hidden divergence when you get that. This is the other way around. This is higher prices. Maybe, but you see here. Oh yeah, maybe that's quite strong as well. Look, lower, high, higher, high, lower, high. Look at that. I don't know. Anyway, maybe I'm confused. It's easy to be confused looking at this. Let me just have a look at the CCI on a higher time frame. You've got a little bit of a ghost forming here. Look, you see that? If you break that neckline on the 2-hour chart, it's a bit of a ghost. Got a kind of breakdown there. That would be a ghost. You got a bit of a Vegas going on here on the daily chart. See that? But usually with that Vegas, you get that, don't you? On the 3-day, it's easier to see. You've got like a neckline there. If it breaks down. Nothing here. Monthly is crazy overbought. There you got a bit of, you see you've got divergences on the monthly time frame on the CCI. You've got a lower high, potentially higher high. It just means you're seeing divergence. I'm not like, you can't trade it, it's just an observation. This is going flat, everything else is going flat. Yeah, you've got a little bit on the 30 and the 15-minute time frame. You've got a little bit of a break going on here on the CCI as well. Gone into heavy oversold now. All right. Okay, so we have our trades potentially. Let's see what happens. Yeah, I'm not crazy to take these unless I see what I want to see. If I don't see what I want to see, I won't take them, and I don't care. Like, even if I was right, if I don't see what I want to see, I don't take the trade, even though I'm right. Yeah, I only take the trade if I see what I want to see. And in this case, I want to see a swing failure pattern. So I'm gonna put an alert on that. Okay, and then lower down, it might not swing failure. That's why I've done it like this, but you know, this could be like that too. Swing failure would always be better. But if it does that, then I'll just have another alert lower down as well. It'd be a good place to long actually. And that would be another long BTC ATH. Right, got 2 alerts there. I'm in a short right now. It was an easy short. And then if it comes down here, I'll take profit on that short. I'm not going to hold those shorts just because don't need to. Just take profit. Look for the next trade. Okay, that's BTC. Any questions? Sebastian, David, anyone else? Anyone has anything to say? Any comments, observations? I think. I saw a post today that Daniel said he's expecting 100,000, right? So if Daniel's expecting 100,000, do you know what that means? You know what that means. Let me find it. So I don't know if people realize, but there's this guy who's a really good trader. Actually, I was part of CC. I am part of CC Pool, so I learned from his knowledge. There, here it is. Look, BTC 100,000 target is real. Live in 32 hours. What the hell? Do you want to watch it? No, I can't be asked. Friday the 15th. It should be Friday the 13th. So usually when he posts bullish stuff, the price goes down. Usually when he posts bearish stuff, the price goes up, like literally. So the fact that he's put 100,000 now probably means the price is going to go down. we always counter trade him. He's right a lot, but I mean, when he posts stuff on social media, suddenly the price goes the opposite way. So the fact that he's just posted BTC going to 100,000, it probably will in the future. But probably because he's just posted that, probably the price is now going to crash. And everyone is going to get really upset because people are like looking at his video and they're going, BTC 100,000, buy, buy, buy. I can make a quick $27,000. Yeah. And then suddenly the price goes down to 50K. That's what happens. So you can't really, context is key. Yeah. You can't read that and wow, 8,000 views. You can't read that and take that seriously. He's probably talking about like 6 months from now or something. Anyway. So interesting, right? No one's got any more comments. Oh yeah, Sebastian's got something to say. We're already pretty overextended. I think following the next pump would be the retrace. Yeah. But I mean, do we retrace just back to here? Like, I really think a bullish consolidation formation or pattern would be just this, you know. That would be nice. It would be nice to just consolidate above the previous all-time high. And I think that would give altcoins a lot of room to move if Bitcoin is just consolidating above the all-time high. I think that would be really nice. I just don't want to see Bitcoin lose the previous bull market all-time high. I think it will get quite bloodbathish if that happens. You'll start getting some big short center if we come in, you know, if we come down, lose that. I think it will get quite, it'll be really crazy. It'll be a big drop. You'll get longs close, you'll get shorts enter on the retraces. You'll get quite bearish if that happens. Could happen. Anything can happen in Bitcoin. This is the thing. You have to realize that anything is possible. I'm going to have a look at XO charts as well. Just to see if I see anything interesting. Oh, you've got some shorting going on here. Look, just now. These are shorts. 2.4 million, 1.2 million. It's really nice. It's good to see shorts coming in. There's some shorting going on now. I can see that. I can't see any local divergences on the CVD. Can't see it. Nothing crazy. Lower CVD, lower price. Got a little bit of shorting going on here. See, as the price is declining slightly, the OI is going up. As the price is declining, the OI is going up. That's how you can tell. This is quite a big increase in OI. Look, 38 million. What is that? T size, dominant size order green. So you have longs there. It's mostly longs. See, OI doesn't tell you if it's shorts or longs. Yeah, it just tells you the overall increase in open interest in that 5-minute period was 38 million. And then you look down here and it tells you the dominant order size is plus 7.3 million longs. So there was more longs in that OI, but there were shorts too. And then here it's kind of balanced. There's another 30 minutes like longs and shorts, but there's no liquidations. You see, there's a few like really tiny liquidations up in the highs, but you've got shorting going on and they haven't been liquidated. So you've got people sitting in shorts now in this upper range. Yeah, and maybe someone took a short and now they're slowly adding to their short, or maybe other people are adding to their shorts, but I can see that there are some shorts coming in. And I can't see that many longs coming in actually. So you had a liquidation here, just that big one here. So maybe if that long closes, it will put the price down. Look, this one here. And they are underwater at the moment. You can see that because the long came in at about 73,580. They're only slightly underwater. They're only slightly negative. You see, that's where the price is now. We're at 73,449 now, and the longs came in here. That's the candle of interest. Okay, that's at about 73,600. These two, that's where the big OA comes in. So if you get longs close at market, it was just going to pull the price down. It's just going to be a market sell basically. Okay, I can't see any divergence though. Let's go back to BTC and let's see. Yeah. On the 15-minute time frame, that was a bearish close. This is a bearish close, but it's not really, there's no continuation. You can see it's coming back over that previous slide. It's a bearish close though. You're getting these reversals on the local time frame. Let's see, there's a reversal, got a reversal. You get lots of reversals, but no follow through at the moment. We'll be getting reversals through the whole of this range. This is a look up here, reversal, lots of reversals, no follow through. These are all reversals. All right, let's just stop BTC now. I think we know what's going on. I don't think anyone knows. I mean, looking at the price action now, like just here, it does look bullish, huh? Kind of reminds me of the S&P 500, where you get, maybe we'll get this kind of snap up and it will continue. Yeah, and it will just keep on doing that. You'll just keep on getting this kind of behavior like that. You just, I'll show you what I mean. But that wasn't the daily time frame. Like here, look. See that? You see this? This is the daily time frame though. This was back in 21. And like you see that? It's like down, up, down, up. It just continuously bought up. Up, up. Even that, fake out, and it just rallied up. Kind of reminds me of that. That's really bullish, this kind of behavior. So if we start getting to, if we start seeing, and the reason it does that is because you need to go down to collect liquidity, and then you need to squeeze the shorts to make a new high, and that's all you're doing. But there isn't enough, you're not going to get that crazy short squeeze, which is going to create that kind of big candle. So you need to create price action like this, and it can go on for a long time. And we're not seeing it on the daily chart yet, but I am kind of seeing it on a little bit more of a local time frame. Kind of similar. Let's see. Who knows? It does look bullish. So let's just see. Let's just see what happens. We're above the previous bull market all-time high. I think as long as you're above the previous bull market all-time high, you're going to be bullish, and you're not going to be bearish. I think that's the line in the sand. That's a historic line. Very clear to see. So if the price wants to go up, that we need an SR flip on that level. Okay, so that will be your new support level for continuation. If the price is going to continue, that has to be the line in the sand. You lose that line, then you're into a failed auction. Okay, reclaim that line, then you're following a failed auction with a sign of strength. Okay, that's kind of how it works. That's a really important level, and so I think everyone should mark that off. On different charts, it's going to be a different price. On Bybit inverse perpetuals, it's 69182. On Binance, anyone is interested, people do trade on Binance, it's probably a different number. It's 69,000 exactly to the dot. So on Bybit it's slightly higher, about $182 higher than on Binance, right? So it's kind of it's a little bit of an area of a couple of $100 either side. So should we just do this now? Should we just pull that? Okay. Let's go on to something else. Let me just have a look at these other charts for a second.